Hey everybody, it's Michael Martin. Happy Friday. Hope you're doing well. How do you like this new setup here? Trying to, it seems a lot better. There's not a lot of crap in the way. And hopefully the quality of the video and the sound are good. The camera's 4K. So today I wanted to talk about, in trading, you're probably coming to understand that there's a conjugation going on between what's going on in your outer world versus what's going on in your inner world. And that's true both of your own emotional intelligence, your goal setting, but also what the markets are showing you. And sometimes those paths kind of converge, sometimes they diverge. And we kind of talked about that at length yesterday. But it's always important, I think, to study yourself to understand how you're going to behave as certain market conditions unfold. It's hard to predict how long they're going to last, right? Right now, we're worried about bank failures, the economy. I hear people talking about recession. I hear talk about bear markets. Like all that's very difficult. If either of those are true to any degree, it makes buying stock long a bit more challenging. So then what happens? Again, in my way of doing things and what I consult to for the handful of folks that want to, work with me one-on-one, we talk about you have to have your inner world reflect what you want in the outer world, right? As opposed to letting the outside world affect who you are and how you feel, putting you kind of in reaction mode. Yes, there's times you have to react to things that happen to you that were unexpected, but for the most part, the successful people that I work with have a clear vision of who they are and what they want to do, and they go out to execute that regardless of what's happening in the outside world. They stay in control. And I think it was George Bernard Shaw. I didn't come up with this myself. If I don't have the name right, I apologize. The main thing is that I didn't come up with this, but I believe it. And then he said, if successful people can't find the circumstances that they need to become more successful, then they create them on their own, right? So this leads us to the point of the day, and that is, Michael, I've been struggling with trading. I think I'm going to take some time off and go get a degree. And I wouldn't do that. And the reason is because the degree isn't going to help you trade better. If you want to get the degree for the sake of getting the degree, then get the degree. If you want to take time off from trading, you can do that without having to take on educational debt, which I also would not do, because the tax treatment for that debt is really bad, meaning, you're retiring the debt with after-tax dollars. It doesn't really give you any favorable write-offs, a whole other thing. But so I would sit and then go back and look at my inner world and say, okay, what is it about this designation, whether it's a CFA, CMT, MBA, maybe you want to get a finance degree, or a PhD in quantitative finance. Again, if that's who you want to be as a trader, it might make sense. But I know plenty of people who have designations like the CMT and like the CFA, for example, but they're not really good at managing risk. They know a lot of stuff, which is valuable and it's important, and they can be helpful people. But again, as I've said, we don't get paid to know things. We get paid to execute. Now, maybe you could make the argument that getting, say, a CMT would help you with your trading, but only if you're willing to go and, if nothing else, simulate, never mind going to put real money to work. Now, you can do that on your own. You don't need a designation. You don't need anyone's permission, right? You can go do that on your own. And so then you want to question, what is the relative strength of your goal of wanting to make it as a trader? Because as I said before, within the past week or so, there's no external solution to your internal issues. So if you have insecurities, you need to work on those first. Getting a CMT or an MBA isn't going to reduce or remove your insecurity about not knowing how to manage risk in the markets. Or if you're already doing that, you want to try a new strategy. You can do that on your own without having to put yourself. So you're in effect, you're deferring the feelings that you don't want to feel. Because as soon as you come back with a CMT, sure, you might be more edified as to certain technical things with the market, but you're still going to have that internal problem of feeling fear or having inhibitions about taking risks. You might be able to describe every personality in the marketplace as it relates to a particular trading style and this and that, but there's no correlation to me in knowing that that's going to help you actually trade better. Now, the folks who have those designations could probably tell you better. The ones that I know who trade well kind of always consistently traded while they got their designation, and they didn't get their designation or seek the designation because they felt insecure. They just wanted to get more information to see maybe it would help, maybe it wouldn't. It's a rigorous program, right? The syllabus is largely set. There's ongoing continuing education, things that you can learn for sure. So for me, I'm pro designation, but the caveat is that, again, if you have emotional issues around your trading, those are going to stay with you until you resolve them. And as far as I know, the syllabus and the curriculum for the CMT doesn't help you address that. So the work that you need to do on yourself, you need to do by yourself, or with, you can go, join a trading tribe. You can go do, if they still exist, you can do, work with a therapist. You can work with a coach. You can do many, many things in that realm. But this, again, is one of the reasons why I say work on yourself first, and then your trading will get better, because you have to know who you are. You have to know how to execute when no one's watching, right? Because that's character. So it's very deep. And now you probably understand why it's very difficult for some folks to make it longer term. Sometimes folks can jump into the marketplace and the markets are amenable to pretty much all trading styles because you're in a bull market. And so you get the sense of confidence that you know what you're doing, but then the minute things change, right, and you get into a choppy market, you might feel like, oh, wow, this isn't fair. Things have been going so swimmingly. Now they're not going so well. I need to change gears here. Talk about back testing. You can go back and watch that. But generally speaking, one of the first things that I did in the managerial area on Wall Street was, help people prepare for like the licenses that they needed to get in order to be in the business, right? So many, many, many moons ago, when I had like a Series 7 and this and that, I knew how to study. I was a pretty good student, so I studied everything, passed the test, which you kind of needed to do, right? If you're in a training program, and you're getting paid to train and get into the business, if you don't pass the test, you get fired. So, because you can't really do anything on Wall Street, and especially if you're speaking with the public. And if you're going to speak with the public, you typically need to have a license to do what you're doing. But here's the thing. When I looked at all the standardized licenses that I had for various reasons over time, there wasn't anything on any of those tests that helped you understand or taught you how to make people money. It was largely a compliance test. So if you're endeavoring to join, firms and this and that, and you want to get into the business, also be mindful that the best way to learn how to trade is to just start trading. Series 55 and Series 7 and Series 65, they're all interesting. It's all interesting stuff. But like I said, it's compliance. Series 7 land, you're looking at understanding the differences between equities and bonds. You're looking at, how those things trade. How are they taxed? What's the risk profile? Right? KYC, know your customer, New York Stock Exchange Rule 405, appropriateness of investments. There's nothing on the test that says, here's how you make money. And there's obviously nothing in the preparation materials either. How are things taxed? Stocks have dividends. They can get cut. There's risk. There's limited liability. Bonds have maturity. What's the difference between a treasury and a corporate bond versus a municipal bond? What are bond insurance? Like, again, all interesting stuff, but it doesn't help you make money. Those are facts, which you could look up on the internet for free. So again, I believe in knowledge for knowledge's sake. I believe it's good to kind of keep learning. Maybe creative ideas, can come from it. But ultimately, I haven't seen neither a test nor a designation that helps you make money. And so if you want to make money, you have to learn how to make money, which means you have to learn about yourself, and then you have to learn about any type of trading technique. And the best way to do that is to, you can simulate for a while, but sooner or later, the simulation really, though, absolves you of having to feel any real emotional pain. You can feel frustration in that you can't come up with a model that's working or has positive expected value, but you're not really losing any money. You're losing its opportunity cost, because you're just yet another day away from being able to go to the marketplace and at least trying to do something that has worked in the past, because it's not really predictive. But it can give you a peace of mind if you want to get going that way. So that's why I say, talk with your financial advisor, figure out what's appropriate for you, and then learn how to, put those, ideas to work and actually take real risk. Because people refer to it different ways, but you don't really feel the burn, right? You don't feel the excitement of making money. You don't feel the burn of losing money if you're paper trading. Now, again, after a while, there's no excitement about making money, and there is no burn about losing money, because it is what it is. If you put on enough trades, you know that those are the outcomes. So there's really no reason to get excited when you have a big winner, and there's really no reason to feel the burn when you're losing money, because you know it's going to happen. So no sense in getting all amped up about it, unless that's the goal, right? Because win or lose, everyone gets what they want. Maybe you're an excitable person. So if you're a seasoned pro and you're trading at, Tudor, I don't see any need to go get a designation. Again, if you're already doing swimmingly and you want to, get a more professional understanding of the million ways you can do this, it might help you understand, various technical aspects of trading. So you can do that on your downtime and, fulfill a goal. I guess it's a goal. It's certainly an achievement, that's for sure. Goals for me are standards that you set for yourself in areas that you don't know how to do. Getting a pilot's license or getting a designation is something that you know how to do. You go sign up, you pay the fee, you get the material, you study, you take the test. So again, it's an achievement for sure, but a goal for me is a real stretch mark. It's something that intimidates you. It's something that's going to really change your life. So again, I am pro CFA, I am pro Series 7, I'm pro CMT for sure, as I'm bullish on all of it. But just understand what those things mean to you and what you think they actually mean, right? Because ultimately, if you have reluctance to take risk or you're in fear of losing money, I don't think a deeper intellectual understanding of things is actually going to help you absolve that feeling or resolve it for you. The only way to do that is to actually figure out, why do you feel that way, right? Because there's not, to me, an intellectual solution to an emotional issue. It might even be something to understand why you feel the way you do from a psychological or a clinical standpoint. But ultimately, it's only through practice and repetition, right? Like a scrimmage, right? You go from practicing the techniques. If you were on a sporting team, then you actually had a scrimmage, which is likely, if you're not into sports, is a game-like environment where the result doesn't really matter so much as what you learn about your behavior while you're in the scrimmage. Did the things that we practiced, back-tested, work in when we had real people playing defense against us, for example? Or if we had defensive strategies that we were trying to implement, did they actually work against a live opponent who had different goals and objectives than we did, which was to beat us, right? And then you go into a game and you take best practices. So again, I'm bullish on all of this stuff. I'm just saying that don't use it as a crutch. That's ultimately the moral of the story here, is that be careful, because you could spend a lot of money and a lot of time and not necessarily get the results that you hoped you were going to get, right? Because what you were really looking for is a bit of a crutch. kind of goes back in the same feeling tone of, should I take the loss or should I hedge? Right? So kind of know what you're getting into before you get into it. And then, yes, of course, I'm bullish on all of it. But it's important to know what you think the result is going to be, because the psychological and the emotional side of trading is very, very sneaky, especially if you're a person where the subconscious of your world has really been running the show, right? You're aware of what you're aware of, but what you don't know is all the stuff that you picked up from your nuclear family, most likely, and your environment when you were growing up. So all that kind of stuff plays out. And that's why I say study yourself first and get your PhD in you. And then if you need something from the outside that you think, take a chance, right? Because what's the worst case that could happen? You learn more, you spend a couple years of your time, you meet new people, which can help, professional connections, right? Then you're part of something that's bigger than you, right? There's a CMT association, for example, then they put on events so you can meet with other like-minded people. That's helpful. CFA has an institute as well. So, and they have ongoing lectures, they sponsor things. There's also continuing education requirements. So I think all of that is good. But I don't think it replaces how you have to learn about yourself. That was my point. All right? Anyway, folks, I hope you had a good week. I know these are challenging times in trading. Trade smaller if it's hurting you. If you haven't already gotten a copy of the audiobook version of The Inner Voice of Trading, click the link below. You can get it for free. And please, if anything has resonated with you on this show or this particular episode, please like and subscribe. Click the bell. You'll get alerted when I do new videos, which is typically every day. For those of you listening on the audio only, you know, there are full-on videos now at the YouTube channel. You can check it out if that's a better environment for you. Anyway, folks, I hope you have a great weekend, and I'll see you Monday. Okay, everybody, thanks for being here. Please take a minute, like and subscribe to the show. You could also leave a comment. I don't have all the answers, so it's good to get some feedback. Also, if you would like to support the show, check out the links below. You can get the free audiobook of The Inner Voice of Trading, and also information about the course that I teach with Victor Sperandio. Thanks for being here, folks. I'll see you tomorrow.